Volkswagen stated that it will not maintain its market share in China by reducing prices. As competition intensifies, Volkswagen's electric vehicle sales have plummeted in China. However, thanks to strong growth in the American and European markets, the largest European automaker's electric vehicle sales surged by 42% in the first quarter. On Thursday, May 4, Volkswagen announced that it delivered 141,000 electric vehicles in the first quarter, an increase of 42% from the same period last year, accounting for 7% of total deliveries. At the same time, plug-in hybrid vehicle sales increased by 9% to 55,756. Overall, deliveries increased by 7.5% to over 2 million vehicles. The automaker's revenue has benefited from the rebound in sales volumes in Europe and North America, which has offset the decline in sales in its largest market, China. According to its earnings report, the company said that all vehicle sales in Volkswagen's largest market fell nearly 15% on the basis of the already weak previous year. In addition to shortages in parts supplies, intensifying competition also had a negative impact during the reporting period. The number of electric vehicles delivered by Volkswagen to Chinese customers has decreased by about 25% compared to a year ago, as the business has been impacted by the price war sparked by Tesla. Over the past few months, Tesla has significantly lowered vehicle prices, causing Tesla's profit margin to hit its lowest point since 2020. Since then, Tesla has raised prices twice, but the most popular models are still cheaper than they were at the beginning of the year. CEO Elon Musk recently said on an earnings conference call last month, "We believe that driving higher volume and a larger fleet is the right choice rather than reducing volume and increasing profit margin." Volkswagen said it has no plans to follow in Tesla's footsteps. CFO Arno Antlitz said in a conference call with reporters, "We are focused on the profitability of our business, not on quantity. This is especially true for electric vehicles. We don't want to lose sight of our profitability targets." According to Reuters, Volkswagen's goal is to achieve the same profitability for both internal combustion engine cars and electric cars. The production cost of the latter is still much higher, partly due to the high cost of raw materials. Volkswagen has already begun building 2 large battery factories in Europe, one in Germany and one in Spain. Antlitz said the company is in discussions with several countries to find locations for potential new factories. Volkswagen remains optimistic about its future sales. In a statement earlier this Thursday, the company said, "The group continues to see strong demand, with 1.8 million vehicles on order backlog in Western Europe alone, including 260,000 electric vehicles." This is consistent with a report from the International Energy Agency last month, which said that sales are expected to grow 35% this year to reach 14 million vehicles, or 18% of the entire automotive market. Meanwhile, Volkswagen's revenue in the first quarter rose 22% from the previous year to €76 billion, $84 billion. Operating profit increased 35% to €7.1 billion, with a profit margin of 9.3%, if valuation effects from commodity hedging are excluded. The total profits of 28 Chinese industrial sectors in the first quarter have decreased year-on-year. On April 27, the National Bureau of Statistics of the Communist Party of China released a batch of data, among which the total profits of industrial enterprises above designated size in the country from January to March were 1.51674 trillion yuan, a year-on-year decrease of 21.4%. Among the 41 industrial sectors, the total profits of 28 industries decreased year-on-year. Total profits refer to the profits earned by enterprises in the production and operation process after deducting various expenses from various incomes, reflecting the total amount of profits and losses realized by enterprises during the reporting period. The data released by the National Bureau of Statistics of the Communist Party of China are as follows. From January to March, the total profits of industrial enterprises above designated size in the country were 1.51674 trillion yuan, a year-on-year decrease of 21.4%. From January to March, among industrial enterprises above designated size, the total profits of state-owned holding enterprises were 589.24 billion yuan, a year-on-year decrease of 16.9%. The total profits of joint stock enterprises were 1.12903 trillion yuan, a decrease of 20.6%. The total profits of foreign, Hong Kong, Macau and Taiwan invested enterprises were 331.81 billion yuan, a decrease of 24.9%, and the total profits of private enterprises were 389.41 billion yuan, a decrease of 23.0%. From January to March, the total profits of the mining industry amounted to 360.45 billion yuan, a year-on-year decrease of 5.8%. The total profits of the manufacturing industry amounted to 1.02076 trillion yuan, a decrease of 29.4%, and the total profits of the electricity, heat, gas, and water production and supply industry amounted to 135.54 billion yuan, an increase of 33.2%. In the 41 major industrial categories, from January to March, the total profits of 28 industries decreased year-on-year, 10 industries grew, 1 industry remained the same, 1 industry had reduced losses, and 1 industry went from profit to loss. Specifically, the profits of the petroleum and natural gas extraction industry decreased by 4.8%, the profits of the coal mining and washing industry decreased by 4.9%, the profits of the specialized equipment manufacturing industry decreased by 10.1%, the profits of the agricultural and sideline product processing industry decreased by 18.4%, the profits of the automobile manufacturing industry decreased by 24.2%, the profits of the non-metallic mineral products industry decreased by 30.6%, the profits of the textile industry decreased by 34.0%, the profits of the chemical raw materials and chemical products manufacturing industry decreased by 54.9%, the profits of the computer, communication, and other electronic equipment manufacturing industry decreased by 57.5%, and the profits of the non-ferrous metal smelting and rolling processing industry decreased by 57.5%, and the profits of the petroleum, coal, and other fuel processing industry decreased by 97.1%. In the previously released economic data for the first quarter of this year, land sales revenue fell short of expectations, and local fiscal policies have become more reliant on debt-financed construction. According to statistics, in the first quarter of this year, 5 provinces in China issued new debts of more than 100 billion yuan each. On April 26, the Chinese Ministry of Finance released information on the issuance and debt balance of local government bonds. In the first quarter of this year, China issued approximately 1.67 trillion yuan in new local government bonds, mainly consisting of new special bonds. Looking at the scale of new bond issuances in China's 31 provinces, Shandong, Guangdong, Sichuan, Hebei, and Fujian all exceeded 100 billion yuan, while Jiangsu and Zhejiang approached 100 billion yuan. According to a report by First Financial News, behind the accelerated debt issuance is the pressure of economic slowdown and weak growth in local fiscal revenues due to land sales revenue falling short of expectations. The revenue from the transfer of local government-owned land use rights has declined significantly last year and continued to fall in the first quarter of this year, with a year-on-year decrease of 27%. This shows that the economic recovery is still not strong enough.